Welcome. I'm Nathan Krampe for Lions Wealth Management in Minneapolis, and we have a lot to get to today. You know, there's a lot going on with respect to the economy. Now, this morning we got some numbers out with respect to retail, and they weren't as good as what we were expecting. The however is, our economy as a whole is getting better. It's getting better today than it was yesterday. Is going to be better tomorrow than it is today, and that alone is incredibly positive news. So when we talk about kind of what to expect going forward, a lot of it is obviously the Christmas holiday seasonality that's coming up with respect to the stock market. But here's the thing, it's a lot more than just that. We have a vaccine now. Now, that alone is actually not cause for just, being exuberant and saying that the stock market is going to go up. But here's the thing. This morning we had retail numbers that weren't as good. We have a lot of shutdowns that are still happening in this country and around the world with respect to restaurants, with respect to bars, with respect to not only retail, but a lot of indoor spaces. Now, with a vaccine, like I said, over time, it's going to take probably another 6 months to a year to really get this working correctly with the vaccine. But the sentiment surrounding the vaccine is what matters as well. When people feel like they are a little bit more free to go out, to do things, to spend money, well, that alone is going to be a great reason to think that we can grow as an economy just because of that. So we have that as a very, very good positive catalyst. Now there's a flip side to it as well. That what happens if the vaccine isn't as good as what we projected? What happens if basically we have side effects that we weren't intending, or they're more severe than what we were thinking about? Now that's one of the biggest risks to the stock market and to the recovery. Well, those risks right now have been put aside. It's not really something that the stock market is caring about right now. And there's other things that are happening with respect to risks as well. Obviously, we have the shutdowns that are out there. We have the maybe some negativity with respect to the vaccine. We have the all-time highs of the markets, and people are starting to say, well, maybe we're too extended on growth in our stock market, and we need to really have a huge, massive pullback in order to kind of continue forward. Well, the thing of it is that when we talk about where we're at and where we're going, things are getting better, not only in our country, but around the world. That is a very good reason why the majority of the time, I would argue that the stock market is going to discount any negative news. Now that doesn't mean that it's going to discount it every single day, but as a whole, going forward, over say the next 6 months, I would definitely tend to say that it's going to be able to discount it. We're going to be able to grow in the stock market, and with the things that are out there, with the unknowns that are out there, I would definitely say the stock market will be a lot more resilient than not. That is the positive to be looking forward to, and there's always a lot that you can learn from the stock market. One is respect to bonds and how they are acting, and right now people are selling their bonds to buy in more stocks. You don't have that happen in really hard times of the stock market and really poor times when people are saying, I don't need as many bonds and that protection, and they're trying to buy more stocks. So there's a lot to be learned from the stock market, from the bond market, and ultimately take to heart, and you can be learning and putting that to work in your portfolio to make sure that you are able to continue to keep growing. With that, enjoy this holiday season, enjoy your time with family, and be looking forward to good news to come, and making sure that we have the ability to live a life of significance with a well-defined wealth plan. Take care.